Good morning. Welcome to yet another edition of Macro Now, set to be released every Monday morning. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we're going to be contextualizing the rates of change of growth and inflation, not only domestically but globally as well. So with that said, we'll start with the global currency market. The US dollar corrected minus 0.8% last week to signal a big higher low, and is signaling a series of higher lows now since August. It is up 1.1% in the last month. The euro versus the dollar bounced 0.7% last week to minus 1.2% in the last month, and is bearish on a 15-day basis, but remains bullish trend on a 90-day basis. The yen appreciated plus 0.3% versus the US dollar last week. It remains bullish on a 15-day as well as a 90-day trend duration. The British pound versus the US dollar bounced 1.5% last week to minus 3.1% in the last month, and is neutral trend, with the dollar signaling a series of higher lows. As mentioned, the easiest place to see this transition to a more deflationary type of state would be in the commodity space, in the commodity market. With commodities, if you look at the CRB index, deflating minus 2.9% last week to minus 4.8% in the last month, breaking down to bearish on a 15-day duration and teetering that bull bear line. Oil deflating minus 8.0% last week to minus 11.5% in the last month, and breaking back down to bearish trend. And if you look at something like coffee, that deflated minus 4.1% last week to minus 17.0% in the last month, breaking down to bearish trend. If you're looking at across the broader equity market, we had the NASDAQ finally bounce on the weekly. It was up plus 1.5% last week, with the SPYs up the same for the first week, up for the first week in 5. And if you look at one of the most widely owned stocks in Microsoft, that was down to minus 0.8% last week. So you have NASDAQ now down minus 8.1% in the last month, and Microsoft down to minus 11.0% in the last month. And both are currently signaling bearish trend, with NASDAQ volatility, the ticker on that's VXN, not rotating out of the wrong regime of volatility, closing at 36.44 on Friday. And so for that need to happen, you see a breakdown and hold below about 31 or so. Moving across asset allocations here, you have the 10-year yield popping back up to yet another lower cycle high of 0.7 last week, while you have high yield OAS spreads came in at minus 27 basis points to 510 basis points over treasuries. You have gold liking that dollar move lower last week. Gold is up 2.1% on the week, beating out the SPYs, but it's starting to signal a series of lower highs, with the gold market now signaling immediate term overbought, with immediate term downside risk to about 1850. And you see continued enhanced risk rising in commodity deflation sensitive countries like Russia and Australia now. Russia down to 7.0% in the last month, and Australia down minus 4.2% in the last month. And so we're keeping a close eye on here is the dollar, as again starts to signal a series of higher lows since the end of August. And also what you've been seeing since the end of August, and following up in regard to tech and NASDAQ specifically, was that the volatility component of the NASDAQ has continually been rising. And just in the last week alone, you've seen implied volatility discounts in QQQ, tech, Apple, Google, and Microsoft. And with Apple being such a large component of tech and some of the broad indices like the S&P, Apple volatility has continued to rise alongside its price, which is a bearish indicator. So with that said, we are seeing enhanced risk right now. And with that, that's all we have for you today. So please, if you have any questions, please feel free to reach out to me directly, or would like to follow up. Otherwise, thank you for listening, and keep your head up out there.